You ever hear of an elephant in the room? There are two of them, and two that I think really need to be discussed here in the kingdom. Stay tuned. Hello, welcome to the Wealth Transfer. My name is Terry Saka. I'm the Chief Strategist, and today we find two, not just one, but two elephants in the room. Now, what does that mean, elephants in the room, right? These are the biggest concerns that we should have, and this isn't something that's a concern, of course, for we in the kingdom, because the truth shall set you free, right? And if we stay focused on the narrow path, then we're guaranteed to get some inside information, let's say, or at least information that'll help guide to protect and preserve what we're building here in the kingdom, not just in our own personal portfolios, but for the churches and ministries as well. We're going to take it a little bit slower. I want to expand on these two because these are two rather very seriously large subject matters. And you hear them in passing, but you really don't get the detail of what it really means. And so I want to really slow things down. I want to explain in detail some of the data points because I think I moved just a little too fast for them. And I think you're going to find this very rewarding. We in the kingdom, if we are properly educated with information that the mainstream or world doesn't want you to see, then we're just more prepared. We're ready to be there. So when this system does go through, not just when, it's a matter of, well, it's a matter of when, right? It should have happened years ago, folks. Now, keep in mind, this has nothing to do with a negative. Things have been doing fantastic out here in our economy. We have had a tremendous expansion over the last 8 years, easy now. And this expansion has printed trillions of dollars. We've really seen a lot of movement in many employment numbers, even though all of that is skewed and misleading. Unemployment is still drastically high with 100 million plus not working, but they're considered people who probably never will work, which we all know that's not true. So to get to the real numbers and why they matter is to allow us to see when this big debt bomb or this big debt anvil is going to drop. And there's more to this, folks, because it's not just about debt and this, and there's more to it. And it allows us, if we understand it, to be better prepared, and which we must get in the kingdom, because if we can get properly prepared, we can sleep at peace, and we can know that we will have the ability to be there for those that we love. So it's actually a very encouraging message to have that insight. It's almost kind of prophetic in the sense in the kingdom that operate, just trying to get knowledge and information ahead of time to know how to set ourselves up. So I want to go into the very first elephant in the room, which you hear a lot about, but please do not underestimate, because we're going to move slower, and I want you to be able to understand how this is actually going to impact us. The first one deals with, of course, all debts. This deals with the debts of securities and loans and liabilities. Now, this is a big deal because I understand the argument. Let's just backtrack. A lot of folks, we will just keep going into debt. Why not? It's 21 trillion, but why not 28? Why not 35? Why not 60? I understand. But there has costs of service to the debt. There are issues where, put it this way, as an individual, can you sustain a credit card maxed out at levels that cause you to have maximum payments? Let's say you've got 6 credit cards, $25,000 limits, $15,000 limits, they're all maxed out. And yet your income barely allows you to make just the basic payment. Does that sound like that's sound money management? Of course it's not, but a lot of us are stuck in that situation, but that's what we want to get away from. As a nation, we have debts at such extraordinary levels they're kind of doing this shell game, and they've been doing it effectively. And we've seen I call almost a parabolic blow off to the top over the last couple years, really 2 or 3 years. This has really been an issue of an economy that had officially started correcting towards a recession back in 2015. So these last 3 years have really been on borrowed time. The thing with debt, this is only debt on loans. Think about that for just a moment. Only debt on loans. So loans and liability levels of securities, things of that nature. We're at $70 trillion as a nation. Now, okay, fine. Many just say, fine, it's just debt, whatever, we'll keep doing more. But if you notice on the right side there where the red arrow is pointing, that is the 2008 market collapse. So many dynamics happened in 2008, more than just losing 40 or 50% of your portfolio. There was a major paradigm shift in the global finances. And this is what we're going to get into, because I think when you see what really is happening today with some of the biggest raw data points, the most important raw data points we have, I think you're going to realize the importance of being properly protected and preserved. That little hitch in 2008, as in the chart, and when it comes down just a little bit, if you notice from 1980 on the bottom in the middle there, we've had a trajectory pretty much almost straight up, curving upwards. And this is debt. Now, this is our Keynesian economics. This is what we're designed to do. But again, as an individual, when we max out all of our ability of lines of credit, what do we do next? Correct. You usually have a crisis, or hopefully you have more income, right? But as the United States goes, we've had maximum amount of income off of taxes, although the tax cuts we just had changed that scenario. We are seeing extraordinary amounts of debt level increases. So this has been an unsustainable ride, and many people, for us, it's been, 30, 40 years. So we don't really gauge it because it's most of our life that we've increased this debt. But we've reached what we call a very near parabolic state, where the debts become so excessive that it will be difficult to manage the interest. That becomes difficult to manage our credibility globally, even though the dollar is still king. So that little hiccup in 2008 almost literally collapsed the global financial system. And that's what's really important to get with this. Just pulling back from credit collapsed the entire global economics, nearly. And we all remember 2008, and for those that don't, you don't want to. Now we're at an unsustainable level of 70 trillion. So just before that collapse, we were near 50 trillion in debt in America. Now we've added another 20 trillion on top of that. Has anything really been fixed? No. The banks are bigger. The derivative and the securities that they sell are more intertwined with fake, false puffs of air than they ever have, known as derivatives. And we're going to get deeper in, and you'll see why. It's not just America, but why this is so important, because the 2008 reckoning happened on the back of credit default swaps in the housing market. Wait until you see the enormous amount of debt we have in so many other sectors. So the exciting thing is, if we in the kingdom get the vision knowing that this kind of debt level is an unsustainable trajectory, obviously we've been reaping the fruits of it. But there's definitely a consequence that will be catastrophic for those not properly in place. Being protected and preserved is such an honor and blessing for the kingdom, because if we're protected, we will be there to help others, as well as keep the ministries and churches going, as well as we call wealth transfer with the program, because Job knocked it down in 27, saying how that wealth will be transferred. It is definitely on the precipice. I don't know exactly when. We've been doing quite well here during this expansion, but wait until you see this data. And I do know one vital thing to do is be educated. And tangible assets are crucial. These will be the next millionaire classes created when this next cycle actually materializes. So I would give Cornerstone a call. They definitely have operators standing by. At least start the process of being diversified. And the best way to do that is right here.
Buying power. What does it mean to you and your family? Have you noticed the prices of everything we buy are rising? Goods and services are becoming more expensive, and the money you work so hard for buys less and less and less. If you saved $250,000 in cash in the 1960s, that cash today would be worth approximately the same, $250,000. Yet does it have the same buying power today? No, not even close. Now take that same $250,000 from the 60s saved in silver instead of cash. Today, it would be worth a staggering $4.25 million. Now that's buying power. Protect and preserve your buying power now by rolling over a portion of your IRA into a silver IRA. Use the power of constitutional money silver to protect your standard of living in retirement and maintain the quality of life you are hoping for. The paper dollar you are saving has tremendous challenges ahead, so don't delay. Call Cornerstone Asset Metals now at 888-747-3309. Don't give away your hard-earned savings any longer. Be diversified. Get protected today.
Welcome back. So we have the debt. We all hear the debt. And it's all kind of a problem. They argue about the budget in Congress. But how is it really impacting? Well, it really impacts our credibility, as well as, again, let's go back to the individual. If the individual, we the people, are maxed out in every credit card, we've taken out a line of credit on our home, everything's maxed out, what financial condition and position are we in? That's right, it's not a very safe one. And yet if we had a lot less debt, would we be better off? Of course. This is nearing what we call an unsustainable level. Now, it could continue to go. Obviously, it has. We've watched it since the President of the United States, Obama, increased from $9 trillion up to $21 trillion, and everyone, it's still okay, right? So why not add another $20 trillion? I'm going to show you why. But just keep in mind, it was the pulling back of credit, as you see in that blip, why the global system almost collapsed. That is why we know this Keynesian model is definitely going to fail. It's a tower that is going to come down, and the shot was called back at 9/11, and we're going to get into this. Wait till you see how that Shemitah cycle lines up. The next largest concern that we have, beyond just the debt itself in securities and loans and credit, is the U.S. unfunded liability. Now, this is stuff that Social Security and Medicare and these programs that we supposedly had put money aside for, but we did not. If you've noticed in this image here on the right side, that is our unfunded liability level. So meaning going forward, we have staggering amounts of individual debt, business debt, government debt. And these unfunded liabilities, as you see there, 120 trillion. And that's a kind estimate. If you notice to the left there is the U.S. national debt. That's the one that's at 21 trillion. And in the yellow is what was added just in President Obama's term. He literally produced a whopping 11 trillion in debt, more than any president before him, which was pretty staggering. Now, in all fairness, that was led up through the major collapse setup that President Bush did, but this is enormous. And then you come across the U.S. federal budget, very small, all the way across to the left, U.S. federal tax revenue. That's right. Look at the tax revenue, which is record tax revenue, mind you, compared to our unfunded liabilities. And that doesn't count our national debt, and that doesn't count this, the 70 trillion plus in individual credit lines. Now, does this already seem slightly overwhelming? Don't let it, because the amount of debt, again, go back as an individual. What happens when we max out our ability? Maybe we call up and get an extension, right? Or we get another income source. Now, we are getting other income sources. President Trump has done an amazing job to some extent. I mean, he is fighting against the world elite system, but we are bringing in repatriated monies. We are stimulating the system, and we'll probably bring in more revenues. But as you can see, it can't even compare to not just our debts individually, but our unfunded liabilities. Now, I'm going to show these two magnitude pieces of data and why they matter. Because the debt we keep hearing about, oh, we can't put up with it, but yet 10 years later, 5 years later, we still are. Here is why it's getting close. Because I do contend that the next thing that is coming is bigger than 2008 and is something we have never seen or probably will never see again. And it's because of these figures of a mass trajectory straight up, which I call hyper parabolic, with printing money. And there is going to be a reckoning to that, but the encouraging thing is, for those, as Job 27 likes to put it, the wicked pile up silver like dust, which is essentially money, but in the end it will be distributed to the innocent. For the innocent in the right place will have the ability to prosper during this massive wealth transfer. It's just part of a cycle. And as I said earlier, it's overdue about 3 years. I've been shocked they've maintained it 3 years. They're very brilliant at the deception. But the time is near for the kingdom to be aware and, if anything, to have diversification and protection outside this very paper system. And don't kid you, every stock and bond, every piece of paper currency is at tremendous risk to that because it's non-titled liability. Even that stock market, folks, it's non-titled. Now, we've shown this chart before, but I want to really slow down and break it down because I think if we really grab what it means, I like you to visualize if you're living in a big building in the big city, or if you're living in the country and there's one road out. Visualize every single person trying to get out the very same tunnel or road at the same time. Think about that. It's like going to Costco on a Saturday and trying to get through one line, right? Here it is. Now, we've seen it before, but let's talk this through. This is the investor credit and the market system. If you just come along the timeline from the left there, where it goes back into the 1980s up to the current time today, the two colors of red and green represent negative credit balances and positive credit balances, which is cash. I'm either sitting in cash or I'm borrowing money and going into debt into the market system to try to make more money. Brokers are very good at this. They call it margin debt, but it's about just taking out loans to try to make more money with it. Try to double down, I guess you could say, if you were in Vegas. So if you notice from 1980, for the most part, we take out a little money, we gamble a little bit, we go back to neutral. We were pretty clean as an investor class. But then we have the blue line now. Let me backtrack real quick. I'm sorry. The blue line now. That is the S&P 500. So green shows when we as a people predominantly go to cash. Red shows when we go into margin and credit. And what does that mean? Taking risk. That's right. The blue line shows as we were taking that risk in the red, the markets went up. People were making money, but eventually the markets corrected. And this is what we want to get into as a cycle point, because if you remember the Shemitah, for those that do, that Jonathan Kahn spoke of, he was dead on with the analysis. It did happen in 2015, and we're going to get to that. But I want you to keep it in perspective, because if you're in the markets now, is doubling your money important? It is. That's the object of investing, right? In the stock market today, you would have to go to $50,000 to double your money. Invest in gold, you would have to go to $2,600. Problem is, gold's never been there. So it could, but it's never been there, so it would take a little more. Yet silver has been at 32, which will be doubling your money, 10 times, 12 times in the last 10 years. So what's more probable? That's right, silver as a place of storage of value to protect and preserve and go into doubling effect. So I have to take a slight break, but the best place to get started is being educated, and here's a good place to do it.
Buying power. What does it mean to you and your family? Have you noticed the prices of everything we buy are rising? Goods and services are becoming more expensive, and the money you work so hard for buys less and less and less. If you saved $250,000 in cash in the 1960s, that cash today would be worth approximately the same, $250,000. Yet does it have the same buying power today? No, not even close. Now take that same $250,000 from the 60s saved in silver instead of cash. Today, it would be worth a staggering $4.25 million. Now that's buying power. Protect and preserve your buying power now by rolling over a portion of your IRA into a silver IRA. Use the power of constitutional money silver to protect your standard of living in retirement and maintain the quality of life you are hoping for. The paper dollar you are saving has tremendous challenges ahead, so don't delay. Call Cornerstone Asset Metals now at 888-747-3309. Don't give away your hard-earned savings any longer. Be diversified. Get protected today.
Welcome back. Okay, so let's put the chart back up and let me go through it again real quick. Red is when we take margin and credit and risk as a people. Green is when we went to cash to protect ourselves. Blue is the stock market expansion. 2000, we had a very serious market correction. And you see the blue line going down and then the red coming up when we went to some cash. Well, then from 2000 to 2007, we had a slight little expansion. But then we didn't really get into, if you notice the red, not as much debt. But then we had this magnificent CDS, collateralized debt, or the CD notes, collateralized debt notes, and we had a major correction in 2008, and that is in the middle with the blue line on the S&P. But we were in a big cash position after that. After the 2008 collapse, we went to cash and stayed in cash for a while. But if you notice the red, how little credit we took, and yet we had a magnitude collapse in 2008 like we've never seen. Now we come from 2008, the next Shemitah cycle date, well, let me do it this way, it'd be better, is this. Look at the green line. That is August of 2014. That is when the Shemitah cycle started into the 2015 year, and you saw this massive correction beginning anyway. Now look at where we were in the red on the bottom. Look at the green arrow and look at the red on the bottom. Look at how much credit and risk we, the people, were taking leading into 2015. Look at how the stock market, the blue line, the S&P had started going up dramatically. This was the time we were to have a nice correction, probably going to be a steeper one, because if you notice the ones before in 2000, 2008, with those who are investors know those were big, huge, 40, 50% corrections. Major portfolio destructive elements if you're not properly diversified. But in 2015, something happened. But it was a Shemitah cycle year. It definitely was poised to correct. It was definitely on the verge of correction because we saw the data. But then the election happened. And something else happened after the election. We unleashed hope, and not Barack Obama's hope. We unleashed enthusiasm and excitement. And all that cash that you see in the green in the middle there, that cash started going into the markets to the point where the average, we the people, went all into the stock markets now since the election of 2016. Got excited that everything was going well. So instead of cleaning out the market and having a market correction in a recession as we were supposed to, they manipulated at the federal levels and the bank levels to stimulate this market, bull market, further. And it went an additional few years where we are today. But it was all stimulated and fake. Now, mind you, if you notice on the right there for credit and risk, look at how deep we are. That is today. We stand at the largest, the deepest amount of credit, debt, and risk we the people have ever had. On the heels of unsustainable national debt and unfunded liability debt. And I can only stress how unhealthy that is, and actually how really not good it is for the economies itself, let alone the globals, because wait till you see where this goes. We got about 9 points of concern here. And I'm going to outline all 9 points of concern starting today and definitely going into next week. And when you see these 9 points of concern, you'll understand how they relate to these 2 debt data points and what a fuse of a debt bomb that is, especially when you tie it to the global finances. So here we are on the right, the biggest credit debt we have ever had in our lifetime. The 2 biggest previous stock market crashes, not even in comparison to the debt levels we have today. Yet we show the S&P 500 at unbelievable limits. And you think it's going much higher, folks. You really think you're doubling your money in the S&P right now? And there's no sign of cash. We are all in this market. So keep in mind that it is vital to understand these debt limits will have an impact and they're coming soon. I know they can stretch it out. I do. I really respect that. But how far can they stretch it? But one thing I want to leave you with here, at these levels, who is actually getting out of the stocks right now? That's right. We'll leave with number 1 tonight. The smart money is getting out of stocks at rates we haven't seen since just before the financial crisis of 2008. You're talking about a major exodus. Smart money is getting out. So should you. This is a good time to diversify and being protected. I would look to silver because it's liquid and it's biblical and it's our constitutional money. There are operators standing by at Cornerstone to answer your questions. Give them a call. Register on the website for information. But wait until you see the other 8 data points of concern and you'll see how all of that together goes with these 2 debt bombs. And when you see that connected to the world, you understand why we in the kingdom are blessed with information to protect and preserve our assets. So until next week, God bless each and every one of you.